Thank you very much for being with us today. You have a fantastic weekend, and we will look forward to chatting again next week. The market continues to roll ahead, ending the week in style, 1.5% up on the Nifty and holding on to all of its gains, days high. And that is a very steady graph. Well, let's move on to our next guest. We have Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer, with us now. Rupen, thank you for joining in. The screen suddenly makes us feel it's a very different sort of a market because we've gotten used to absolutely no activity and extreme caution on the street. You tell us, I mean, what do you think is changing? Is it the fact that a lot of the Western news flow around banks, etc., is stabilizing? Is it in India's valuations? Do you think the market has made a clear bottom here?
Hey, hi, good afternoon, Surbi. And, so it's end of the month, end of the financial year, and also it's a Friday. So I think it's all reason to be happy. So if you see this year, the equity markets, specifically the Indian equity markets, while today we are seeing a good momentum, but it has been a big underperformer. And apart from the European countries, which have been the best performer this year, and even US is up significantly. And in fact, India has also underperformed the likes of countries like Russia and Sri Lanka. So those exchanges have also done better than India. So the point here is that after a huge outperformance last year, there was a little bit of mean reversion which was warranted, and which is probably what we have already seen. And it is just probably, this year we are still down 4-5%. So nothing has significantly changed. And globally also, frankly, the news flows are very fluid and every day is a new day. So probably for next 2 to 3 months, we might be in that scenario wherein we go up a few days and then we drift down and we might be in a range. And I believe a decisive movement probably we will see post in the third quarter of this calendar year, wherein we probably will have a good clarity around what's happening with the US Fed, the interest rates, finally the Fed has pivoted or not, and all those news flows will be behind us. So net, it's a good day today, but overall our market has been in a very, very narrow range for now, almost 18 months.
All right. Hi, Rupen. Good afternoon. We've been underperforming a little bit, but as you said, it's a good day, right? And it's Friday also. So let's talk about positive things. The Brent crude prices have corrected, which is good news, and it's not moving higher. So that's good from an India perspective. We hope that it, trickle downs further. But from a stocks perspective, you believe the OMCs are still a good play from here on?
Yeah, hi, afternoon, Nigel. And probably, the OMCs have been a big underperformer. And in fact, in the last years, so to say, the value stock rally, the OMCs actually have not participated at all. And if you look through, typically the OMCs do well in a stable oil environment. So it's, probably even if oil goes down significantly, it doesn't benefit them. But probably the range of around between 60 to 75 is a good range for OMCs. And historically, if you see, between 2014 and 18 was the best time for OMCs. And today, all the OMCs are trading at a valuation which are half of those valuations. So I'm talking about price to book of what they were in probably 2017-18. And in these scenarios, finally, they'll be now making marketing margins rather. And this stable oil scenario also warrants for a good stable refining margins. And finally, the working capital should all be good. So all three factors put together, we believe OMCs definitely is one of those tactical play in the current environment of low to stable oil prices.
Rupen, what's your global kind of feedback? Is there because the question really is that if you are sitting on cash, or if you're not fully invested, or you took money off early and you're waiting for the opportunity. For example, at least what I'm reading is most believe there is in the US, perhaps at some point we'll get a big swoon. And we've seen the highs for the year, according to some in the US. And generally, if you get a big swoon, it's correlated. Markets, emerging markets, etc., are correlated. So the question actually is of timing. So any thoughts, Rupen?
Yeah, it's a good question, Prashant. And probably if you see historically, emerging market tend to do well when a global market, rate hike stops. So probably, as they say, buy the last rate hike. That's been the historical, saying. So the question is that where are we there? Have we already seen the last rate hike, or probably we might have one more as a number? Because the law of diminishing marginal utility comes into play, because every incremental rate hikes is not going to help us in taming the inflation. And financial stability probably is now at the center stage as far as the global central banks are concerned. So to answer your question, Prashant, I think everybody is waiting for this most anticipated, so to say, recession or soft landing in the US, so that finally the inflation fears and all then cools off. And our sense is that we might probably see one more rate hike, and thereafter we might see hopefully a soft landing, which probably augurs well for emerging market. And hence, when I initially said that second half or the third quarter of this year onwards, we might see a big momentum in the emerging markets, including India.
Rupen, what are the channel checks suggesting for B2C internet companies kind of growth in the current quarter? Q3 was a challenging quarter. Growth rates moderated. Diwali was not as strong as people were anticipating for many of these internet digital B2C e-commerce company. How has Q4 been for them? Does that continue? Because it's, the consumer spending of the B2C segment is at odds with what we are seeing with the rest of the pack. So say in hospitality or travel, where that demand continues to boom, but there appears to be some fatigue, kicking in when it comes to online food ordering or spending on fashion, clothes, etc.
Yes, Rima, clearly what we are seeing a bit of slowdown in the discretionary consumer spending. Again, it's not a uniform thing wherein the airline industry is doing well, but some other discretionary items are not doing that well. So it's very difficult to pinpoint what exactly is the reason why our QSRs not doing as much ordering, whether some bit of fatigue has crept in, and the people want to go out and not ordering as much for home delivery. But I would say that in the entire journey, probably what we have seen historically in all these consumer discretionary items, there are always patches which are there in which very difficult to ascribe a particular reason why there is a sudden boom or certain slowdown. But as a longer term, from an overall business perspective, we are positive on that. We have to look into case to case on the valuations of these companies to see whether it makes a good investment case to invest into that. But overall, we continue to remain constructive on that space.
All right. Rupen, I'll end with the sector that will kick off our earnings season. And I think that's the one aspect which a lot of people have been a bit sort of murky on, right? Whether we'll keep getting more downgrades like we saw in the third quarter. Your view on overall earnings and the expectations, and a view, of course, on IT, which will kick off the season.
Here, Surabhi, IT has a strong correlation. In fact, IT index has a strong correlation with NASDAQ. And probably now what I see, a lot of the mid-cap IT has a strong correlation with the way NASDAQ moves. IT as a sector, so far, what we have seen that, there hasn't been any, talks of a significant slowdown in their own overall order intake. But here, it all depends on whether the landing, what we are talking about, whether it's going to be a soft landing or a hard landing, or so whether it's going to be a short recession or a prolonged recession. So typically, historically, what we have seen, whenever there is a soft landing and, the IT companies actually see more order intake and, more work with respect to cost savings and all. So it tends to do well. So net, I would say from our perspective, what we'll be watching out from a commentary perspective is how the US market is shaping up. Probably, I would say there again, we will see the BFSI segment clearly having some impact. So companies which have higher exposure to BFSI will see some impact in this quarter. And at an overall earnings perspective, we might definitely see some bit of cuts in the estimate for FY24, because right now still we believe the street is penciling in a bit of higher earnings growth, around 15% earnings growth for 24. We might see some cuts there, but not significant. And I would say still India will be one of those few handful of countries which will see a very strong earnings growth for next financial year as well.
All right, Rupen, we'll leave it there. Thank you very much for your time. Appreciate you joining in and have a good weekend. We'll see you back next week. And next week, again, is looking up with, 2 holidays, right, Rima? So I don't make a big deal of it, but it is a big deal. You don't get those often. Well, 290 points on the Nifty, 17,374, and it's up and up so far. We'll take that break. We're back. What to buy or sell today for a reverse trade when we come back on Monday? That's the question with our technical experts. We're back in just 2.